Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. The strong domestic money into the equity market, primarily via the mutual fund route, has led to a stellar 8.1% return for the Nifty 50 in the June quarter and a 20% jump in the Nifty Smallcap 100 index during the same period. Amidst all this, the competition among several schemes of various funds has risen meaningfully to deliver better returns to its investor. So who tops the charts and which ones have delivered the most returns? To decode exactly this, we are today joined by Piyush Gupta of CRISIL, and they have put out a report ranking different mutual funds for the quarter ending June, and it is different or based on different categories, be it large caps, mid caps and large caps, and it's a long list which is very exhaustive as well. So thank you so much, Piyush, for joining us today. But let's start with the large cap category and that particular fund space as well. There's a new entrant here, Bank of India Blue Chip Fund, according to your list. What makes you give it rank 1, and how do you look at the volatility metrics of this particular name?
Yeah, hi Sonal. Bank of India fund has entered large cap ranking in this quarter for the first time. In fact, during this period, it has completed 3 years of performance history, which is one of the primary shortlisting criteria for a fund to be ranked in the CRISIL mutual fund ranking. And since it has entered for the first time, it doesn't have a ranking history, and it has entered at a rank 1. The ranking of this fund is higher on account of its superior performance. It ranks 1 on the return parameter. It also ranks higher on portfolio-based parameters like industry concentration and company concentration, which means that the fund maintains a fairly diversified portfolio at a sectoral level as well as at the company level. It's a relatively smaller size fund, about 140 odd crores, which means that the liquidity in the underlying portfolio is also significantly higher compared to some of the large size funds. Its performance has been largely driven by some of the stock selection that it has done in the large cap space, which is essentially PSUs that it has invested in. Apart from that, it also maintained a relatively higher exposure to small cap stocks. The average allocation to this in the small cap space in this particular fund was about 5%, compared to a category average of about 2%. So these are some of the that has led to the high ranking for this particular fund.
Okay, all right, interesting. Thank you for explaining that to us, considering also it's a new entrant in this particular category from the ranking perspective. Let's talk about the Bandhan fund. What changed for Bandhan to move from rank 3 to rank 2? It has been consistently improving in terms of ranking coming in from CRISIL as well.
Yes. So Bandhan was ranked 3 in the previous quarter. In fact, last 2 consecutive quarters, it was ranked 3. And then in the latest quarter, it has moved from rank 3 to 2. Its improvement in ranking has been primarily driven by factors like return. It has generated superior return compared to the peer set. It has also improved its score on diversification at company and sector level, whereby its rank in the industry concentration parameter has moved up from rank 4 to 2. And in case of company concentration parameter, the fund has moved its ranking from 4 to 3. Also, at a liquidity on the liquidity parameter, fund maintains a rank of 3. All of this basically contributes its improvement in ranking in the latest quarter.
Okay, so that's about the Bandhan Mutual Fund. Let's get more specific then. ICICI Pru Blue Chip Fund, that has seen a decline in terms of ranking. Can you explain what went wrong here? What are the metrics that you considered while ranking this one?
Yeah, so when we look at the multiple factors here, the ranking for ICICI Pru Blue has declined primarily on the return parameter. To some extent, it is also because of entry of Bank of India into the cluster rank 1, which has meant that this particular fund has slipped from rank 1 to 2. It's a peer set comparison. To that extent, if there is a fund which has generated a higher return compared to the peer set, they tend to come on top of the ranking. Now, in case of ICICI Pru Blue Chip, it's one of the largest funds, more than 50,000 crores of corpus. So on parameter like liquidity, the fund ranks lower because of the huge asset size that they manage. But it maintains a fairly diversified portfolio at the sector level. In fact, it is ranked 1 on industry concentration parameter. Even on volatility, the fund ranks 2, which is higher than the overall category average. On a company concentration parameter, it is aligned to the peer set. The large part of its performance decline or relatively lower performance, I would say, is one, because it maintains a smaller exposure to stocks in the smaller cap space. Also, it maintains a fairly large proportion of cash in its portfolio because of its large asset size.
Okay, so just talking about a broader picture here, what are some of the important factors considered while revising ranks for any fund on both upside and the downside, and what is the metrics that you consider for ranking any fund in general?
Yeah, so the first step, of course, is shortlisting the funds. There is a pre-filter criteria which is applied to shortlist the funds. Once the funds meet those parameters, for example, fund has to have at least 3 years of performance track record for it to be included in the ranking, and the fund also needs to have a minimum assets under management. Once that filter criteria is met by the fund is included in the ranking. Once the funds are shortlisted, there are multiple parameters we look at. We look at the performance of the fund. So in case of equity category, we typically look at 3 years of performance. Here we typically look at a rolling return of these funds over a 3-year period. We also look at the volatility of these funds for the same period of time in terms of performance. On portfolio-based attributes, we look at what is the extent of diversification which is there in the portfolio, both at the company as well as at the sector level. And also what we look at is the liquidity of the underlying portfolio. Here we primarily look at what is the extent of exposure that the fund has in different stocks, and how does it compare with the daily liquidity or daily trading volume on the stock exchange. So typically, if there is a fund which has higher exposure to a stock in comparison to the trading volume on the exchange, then the fund tends to get a lower ranking on the liquidity parameter. So all of these parameters are combined together with different weights to arrive at the final score on which the relative ranking is done.
Okay, all right. That explains the list that you have shared with us as well. We'll quickly take a look at the large cap funds and the rankings as well. Of course, it's not the entire list. We've just chosen some of them where we did see some movement in ranking as well. So you have Bank of India Blue Chip, which Piyush explained as well. It's a new entrant, and why it has made an entry here as well. GM Large Cap Fund continues to be at rank 1. Nippon India Large Cap is the one that continues to be at rank 1. Bandhan Large Cap, as I explained, or as I mentioned, it has seen an improvement in ranking. That continues to be the case. On the second ranking, we have Baroda BNP Paribas, there's Grow Large Cap, Edelweiss Large Cap, ICICI Pro Blue Chip, which has seen a rank down from level 1 to 2. The others on the rank number 3, we have HDFC Top 100, SBI Blue Chip, there's Taurus Large Cap, Union Large Cap, and the other names will also come up for you on the screen. So there have been some changes which have been made in terms of rankings across the board in the large cap space. Piyush, it's a very interesting chat, but we have to take a quick commercial break. On the other side, we'll continue our discussion on the different rankings, and we'll focus on some other asset categories as well. Welcome back. You're still tuned into MF Corner. We still have with us Piyush Gupta joining in from CRISIL. We are discussing everything about CRISIL's June quarter mutual fund rankings, and we just covered the large cap bit. A lot of interesting names there. It's the time for mid cap funds, because you've seen mid caps doing really well. Piyush, ITI mid cap fund that continues its first ranking. What explains this? What's the cause for this outperformance or continuous outperformance?
Yeah, so ITI Midcap, in fact, got ranked for the first time in the previous quarter, and it was ranked 1 earlier also, and it continues to maintain rank 1 even in the latest quarter. Large part of its superior ranking compared to peer set is because of the performance that the fund has delivered. It also scores, however, high on industry concentration, company concentration, and liquidity. So it maintains a fairly diversified portfolio at a company level as well as at the sector level. Also, given this relatively smaller size of the fund also scores high on liquidity. When it comes to performance, the fund has improved its ranking from 2 to 1 in the latest quarter. Some of its stock selection in defense and capital goods has positively contributed to its superior performance. Apart from that, fund also maintains a relatively higher exposure to large cap stocks, and some of those large cap stocks have also contributed significantly to its superior performance.
And Piyush, how does the ranking in direct and regular funds change? How does that mechanism work?
Yes, so we put out rankings for both direct and regular separately. As we discussed, we are looking at a combination of parameters which are performance linked and portfolio linked parameters. And in case of direct and regular plan, the portfolio composition remains the same for both regular and direct plan. And to that extent, the assessment of portfolio is same for both direct and regular plan. The only difference that comes in is in the form of performance, and performance also gets changed primarily because of the expense ratio that the regular plan is charging versus a direct plan. So typically, we'll find that if there is a huge dispersion between the expense ratio of a direct plan and a regular plan, the performance also varies within the peer set for respective regular and direct plan.
Okay. Any names in the mid-cap space that stand out for you in terms of ranking? We saw the downgrade coming in from Quant Mid-Cap Fund as well. Something that stands out for you in general?
Yeah, so here I'll talk about three funds, and these three funds have, when we look at their performance and ranking on the last 4 or 5 quarters, these funds have maintained either 1 or 2 in these last 5 quarters. One such name is Motilal Midcap Fund. The fund has been ranked 1 in the latest quarter. In fact, it was ranked 1 even in the previous quarter and has maintained in the top ranking over a period of time. When we look at the portfolio construction of this particular fund, it is a concentrated portfolio. Typically takes about 25 to 30 stocks with respect to the portfolio construction approach. Also, the approach that the fund follows is it's sector agnostic, so tends to maintain a diversified portfolio at the sector level, but the stock selection is bottom up. And that's where there is a bit of concentration risk that also comes into this fund when we look at a company concentration parameter. However, the fund has been able to deliver high return primarily because of some of the stock selection that it has done across various sectors.
Okay. So this is about the mid-cap space. Of course, there's a long list here. So let's just quickly look at it yet again, because the mid-cap space has continued to do really well, right? If we talk about the small-cap and mid-cap side, that has been very strong. So the ITI mid-cap fund, as Piyush said, continues to be at rank 1. For Mahindra Manulife mid-cap, we have seen an improvement in ranking from 2 to 1. Edelweiss mid-cap has seen an improvement in ranking from 3 to 2. LIC MF mid-cap has seen an improvement in ranking from 4 to 2 now on a quarter-on-quarter basis. Then we have HSBC, which has actually seen the rank come down from 2 to 3. Kotak Emerging Equity has done well from 4 to 3. Quant Midcap, there has been a downgrade here. This particular fund has done really well. My producer tells me it's around 35% CAGR over the 5-year period. So that is something which is something that you should keep an eye out on for as well, quant funds. The other ones include Mirae Asset Midcap, where there has been the rank down from 3 to 4. Union Midcap has the same number. UTM Midcap has seen an improvement in ranking from 5 to 4. And the other names include Taurus Midcap and PGM India Midcap Opportunity Fund. Of course, this is not the entire list that CRISIL provided us, but of course, there are a lot of funds in the mid-cap space that they have ranked as well. Let's talk about the PSU and banking funds now, Piyush. That is an interesting list as well. Sundaram Banking and PSU Fund has seen improvement in rankings by a factor of 2. Can you explain the rationale here?
Yeah, so banking PSU, which is a debt category in the mutual fund space, the investments are primarily done in the issuers which are forming part of banking sector or which are PSUs. Now, when we carry out the ranking for debt funds, we look at, just like equity, we look at a combination of performance and portfolio-based attributes. While performance-linked parameters remain the same in the form of return and volatility, portfolio-based parameters are different given the asset class that we are looking at. The way we measure these portfolio risks also is different from equity portfolio. The parameters we typically look at is the credit quality of the portfolio, interest rate risk in the portfolio measured using modified duration, We also look at the liquidity of the underlying issuers which are part of the portfolio, and also the diversification which is there in terms of issuers and the kind of sectors that the fund have taken exposure to through different issuers. Now, when we look at Sundaram PSU, while the fund ranks 3 in the performance and volatility parameter, fund ranks higher on the portfolio-based parameter. It has seen an improvement in sectoral exposure parameter. It doesn't have exposure to sectors which are vulnerable in the current scenario. Even at the issuer level, the portfolio is fairly diversified. There is no skewness with respect to single issuer for a given rating category. Asset quality of the portfolio has seen an improvement. It has increased exposure to government securities, which has meant that the credit quality of the portfolio has improved in the latest quarter. This has also meant that the liquidity of the portfolio has improved. So the exposure which were earlier there in the form of semi-liquid issuers or illiquid issuers, they are no longer there as part of the portfolio. That has meant that the portfolio overall ranking has improved from 3 to 1 in the latest quarter.
Okay, that explains the move that we've seen. Piyush, we have a minute and a half left, so let's quickly wrap this up with the last question. Do these PSU funds have only banking names, or you're looking at other PSU names as well? And will the return profile change now, since we've seen massive returns already? How would you rank it now?
Right. So this is a category which is part of debt category. And when we look at the performance of banking and PSU, the category performance has improved in the last 1 year compared to the previous 2 or 3 year period. The ranking parameter we have discussed earlier, but when it comes to the composition of these funds, they primarily invest into banking issuers or issuers which are part of PSUs. They have to maintain at least 80% of their portfolio into such issuers. Within these issuers, central PSU forms the majority of the portfolio composition, with central PSU comprising of at least around 60% of the overall portfolio. The remaining exposure in these funds are in the form of banks. It could be PSU or private banks, and public sector undertakings. And bottom 20% is typically into sovereign or government securities and cash.
Okay, all right. That's very helpful, Piyush. It was a pleasure speaking with you. Thank you so much for joining us and explain the rationale for these rankings by CRISIL for different mutual funds. With that, we'll take your leave on this edition of MF Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.